Hello and welcome to ActivTrades Weekly Outlook. A slow and solemn start to this week on the anniversary of September 11th. However, there is much to occupy investors and traders from Tuesday onwards. US inflation figures will be closely watched by all as the Fed is due to meet again on monetary policy on September 20th. While markets are generally pricing in a hold on rate increase this month, there is still an outside chance that the incoming data may push the board to act aggressively again to smother inflation. Let's dive in. Chinese new Yuan loans figures are tentatively due on Monday. In July, Chinese banks issued new loans totaling 346 billion yuan, far less than the market expectations of 800 billion and the lowest amount since November 2009. Spending and borrowing are closely associated. When people and organizations are secure about their future and financial situation and feel comfortable spending money, they are more likely to apply for loans. August figures are expected to be up and around 550 billion. Employment data from the UK is due on Tuesday. In the 3 months ending in June, the unemployment rate reached 4.2%, the highest level since late 2021 and higher than the 4% recorded in the prior quarter. Also in the same period, the number of persons employed in the UK declined by 66,000 after a 102,000 increase in the previous 3-month period. An increase is expected up to around 26,000 this week. After hitting its lowest points in December and July, the ZEW indicator of economic sentiment for Germany rose to -12.3 in August. A slight increase is expected again for September when the results are released on Tuesday, as a result of the belief that interest rates have or are soon to hit their peak. The UK is due to release GDP figures on Wednesday. Back in June, the British economy grew 0.5% from the previous month, exceeding market expectations of 0.2% growth and recovering from a 0.1% drop in May, when an additional vacation day for the King's coronation impacted on GDP. A dip of 0.3% is forecast for July. The US annual inflation rate increased to 3.2% in July from 3% in June, although it was less than the expected 3.3%. It puts an end to the 12 straight months of reductions from when the figures began to decline from its 9.1% high a year earlier. A slight bump to 3.4% is expected for August, while the core rate is expected to drop from 4.7% to around 4.5%. The seasonally adjusted unemployment rate in Australia rose to 3.7% in July from 3.5% in June and marked the highest level since April. The number of people without jobs also increased by 35,600 to 541,000. When the latest employment figures are released on Thursday, the unemployment rate is expected to have dropped back to 3.6% and 40,000 new jobs may have been created. The European Central Bank is due to meet on monetary policy this week, with the decision statement released on Thursday and the press conference to follow half an hour later. The minutes from the most recent ECB meeting revealed that despite the policymakers' insistence on the possibility of a September rate hike when they increased interest rates in July, some members were doubtful new data would support another hike. In response to rising inflation, the ECB has raised interest rates from -0.5% to 3.75% in a little over a year. However, analysts expect there to be a pause in the cycle this week. The US Producer Price Index increased by 0.3% month-over-month in July, the highest gain since January after a flat result in June. Services prices increased by 0.5%, the most since August 2022, after falling by 0.1% in June. A 0.4% increase is forecast when the new data is released on Thursday. Published concurrently from the US, new retail sales data is also due. Last month, the results showed US sales increased 0.7% month-over-month, marking the fourth straight increase and indicating that consumer spending is still robust, despite rising prices and borrowing rates. A 0.2% increase is forecast for August. A number of Chinese economic news is due on Friday, including industrial production, retail sales, and the unemployment rate, among others. The annual growth rate of China's industrial output soared to 3.7% in July from 4.4% in June, falling short of analysts' expectations, but is expected to climb again to 4% for August. Annualized retail sales figures have been positive, but gradually falling over the last few months. 2.8% growth is forecast for August, above the previous month's 2.5% growth. Meanwhile, the unemployment rate is set to increase slightly to 5.4% from 5.3% in August. The trade balance in the Eurozone is due to be released on Friday. When compared to a deficit of 27.1 billion euro in the same month a year earlier, June's trade surplus of 23 billion euro exceeded market estimates of 18.3 billion. A slight drop to 20 billion is expected for July. In August, the New York Empire State Manufacturing Index fell to -19 from 1.1 in July, indicating a drop in manufacturing activity for the first time in 3 months and significantly below market expectations of -1. When the latest data is released on Friday, expectations are for an increase to -10. If you would like to read our full outlook, please visit the analysis section on our website. That's all for this week. Happy trading!